Welcome to the topic on handling returns and exchanges in the sales process. In this topic, we will explore how to handle issues that arise from deliveries. We will process returned items, redeliver items, and see how we can use negative rows in a sales documents to handle partial credits and exchanges. To increase customer satisfaction, the company has a liberal policy for returning items for replacement, exchange, or credit. When problems arise from the delivery, a return document is used to give credit or to provide an option for redelivery from the original sales order. An optional document, a return request, can be used to provide a customer with authorization for returning an item. Sometimes the customer wants to return an item to exchange it for a different item. In those cases, the option for negative rows on a sales document can be used to return an item and exchange it for another. Once a delivery has been made, there are several options open for how to solve the customer's issues. The first option is a return request. This document allows you to record the customer's reason for the return and to provide them authorization to return the item. When the item is received, you can create a return. This brings the item into stock and credits the customer for the purchase. If a customer wants a replacement item, there are two ways you can handle this. Either by creating a new delivery from the original sales order or by adding a negative row to send out a replacement on the return. Let's look at these options in more detail. Since the return request is optional, let's first look at the return document. If a delivery is damaged or of poor quality, the customer returns the items to you. A return allows you to reverse the effects of a delivery, either partially or fully. When you create the return with reference to the delivery note, the system adds a reversed stock transaction to return the item to inventory. Why would you need to use a return? For legal reasons, you cannot change or delete deliveries and customer invoices that have already been entered in the system. To correct these, you need to use a clearing document such as a return or an AR credit memo document. If a delivery is returned before you create the AR invoice for the customer, you can post the return delivery in the system. If an AR invoice exists, you cannot use a return. When you add a return document, the return document increases the quantity in the warehouse by the quantity of the returned item. The system also creates a journal entry that posts the value of the returned goods to the debit side of a sales returns account and to the credit side of the cost account. The value of the returned goods is not posted back to the original stock account in order to keep it separate from the value of the undamaged goods. The sales returns account and the cost account are retrieved from the sales returns field and the cost account field on the inventory tab of the item master record. Here is a tip: if you also want to manage the inventory of the damaged goods separately from the undamaged goods, you should define a special warehouse for the damaged goods and enter this warehouse in the return document. Although the return request is an optional document, it can be very useful in managing returns. It allows you to track a customer's request to return an items. Another huge advantage of this document is that you can handle items returned at any point in the sales process because it can be created by copying from either a delivery or an AR invoice. When the customer contacts you requesting to return an item, you can use the return request document number as a reference number that authorizes the return. Often these numbers are called Return Material Request, RMA, numbers. You can enter the reason for the return. It might be in your business process that once you document the request for the return, you send out a box with prepaid postage for the customer to return the item, or you may request that they print the return request document and include it with their returned item. Here is an example of a return material authorization that uses a return request and a return. We shipped the customer a quantity of 5 keyboards. Because we were using perpetual inventory, the delivery created a journal entry for a credit to the stock account for the decrease in inventory value and a debit to the cost account to record the cost of goods sold. The customer asked to return the 5 keyboards. We copied the delivery to a return request. The customer sends the item and references the RMA number. When we use copy to in the return request, a return is automatically created. When the return is processed, a journal entry is created to record. A credit to the cost account for the full amount. A debit to the sales returns account. Note that some customers use the regular stock account for returns rather than a sales returns account because they do not need to separate returned items from the general stock. Some customers may use a separate warehouse or bin for returned items. The warehouse or bin location can be specified on the row of return request. Let's look at an example of a delivery, without a preceding sales order, for the 5 keyboards. Prior to the delivery we had 20 in stock. Once the delivery for 5 keyboards was made we have 15 in stock and 15 available. When the return request is added, 5 keyboards are added to ordered and to the available stock. The return request does not have any effect on accounting. When the return request is copied to a return, the 5 keyboards are returned to stock and a posting is made that reverses the delivery posting. If there had been a preceding sales order and the setting was made to allow redelivery, a quantity of 5 would have been added to the committed column and the available column would have been reduced by 5. A redelivery can be created from a sales order after items are returned. An option exists to reopen the original sales order. The open quantity of an item is increased in sales order according the quantity in the return document. The option to allow redelivery can be chosen by a user or set to occur automatically. One advantage is that redelivery reduces the need for duplicate orders. Another advantage is that subsequent deliveries are easier and more transparent. You can view the connection between the documents in the relationship map. The same functionality exists on the purchasing side for purchase orders and goods receipt POS. When you create a goods return, the purchase order can be reopened to receive replacement items on a goods receipt PO. Let us look at a business example for redelivery. The customer has ordered 10 laptops. The sales order was copied to a delivery for the 10 laptops. When the delivery was saved, the sales order was automatically closed. Since all 10 were delivered, there is no open quantity on the sales order. There was problem with 3 of the laptops. The delivery was referenced to create a return for a quantity of 3. The user chooses to reopen the sales orders so that the quantity of 3 can be redelivered. A subsequent delivery is created from the original sales order. The open quantity of 3 is delivered, so the sales order is automatically closed and the open quantity on the sales order returns to 0. To offer users the option of redelivery, the setting must be made in advance. You can enable the redelivery functionality in the document settings window for sales orders. Once you have selected that option, you have an additional option to always allow the reopening of items in the original order without user confirmation. If this is chosen, then the sales order is always reopened. If left unchecked, a box will appear as the return is saved to ask if the user would like to reopen the items in the original order. This same setting is also available for the purchase order. Negative rows allow you to give credits directly on sales or purchasing documents. Using negative rows you can make corrections directly in a marketing document such as a delivery or invoice without using a separate return or credit memo. Negative rows can be added to sales and purchasing documents. Some of the most useful sales documents for using this feature in are returns, deliveries, AR invoices, and AR credit memos. On most sales documents, like a delivery or AR invoice, the negative row is a credit. However, a negative row added to a return or an AR credit memo will actually be a debit line which charges the customer rather than credits the customer. That is because a positive total on a correction document indicates a credit, therefore a negative amount on any correction document will indicate that the customer owes us. Another reason to use a negative row is to give a customer credit for sending back packaging while they are ordering more items. In most localizations, you can have a document with a negative amount. This can be useful in case the amount on the credit rows exceeds the amount on the debit rows in a return or AR credit memo. In our business example, our customer has ordered 5 batteries. The customer quickly realizes that the batteries are the wrong kind. The customer would like to exchange the incorrect batteries for the correct batteries. We can create a sales document, such as a delivery or an AR invoice to ship out the correct batteries. The same document can include a negative row, or credit row, to receive the returned batteries into stock and credit the customer. Here's a summary of options for returns and exchanges in sales. The summary includes options for crediting AR invoices that are covered in more detail in the top for AR credit memos. For incorrect entry of a delivery, you can cancel the document. The related sales order will reopen so you can create a new delivery. The same is true if you incorrectly enter an invoice, you can cancel and reissue the invoice from the delivery. If you need to return item S, received on a delivery that is not yet invoiced, it is useful to copy to a return request. The system will automatically suggest copying to a return. If you need to return item S, that have been invoiced but not yet paid, it is useful to copy to a return request. The system will automatically suggest copying to an AR credit memo. Once an invoice has been paid, you can no longer reference it to create a return request or AR credit memo. Similarly, you cannot copy from multiple invoices to create a credit memo. If you want to include credit rows in a delivery or AR invoice, use negative rows. A return request can be used to begin the process of handling customer returns. Create the return request from either a delivery or an AR invoice. When you use copy to, the system will automatically choose the correct document for giving a credit and returning the item to inventory. The return document is used to process items returned from a customer after a delivery. A return document allows you to reverse the stock postings and any related accounting postings of a delivery either partially or fully. An option exists to reopen the related sales order for redelivery when posting returns. Configuration for this option is set in Document Settings for the sales order. Another option for correcting deliveries and managing exchanges is negative rows. Negative rows are available in marketing documents in both sales and purchasing. You have completed the topic on returns and exchanges. Thank you for your time.